On today's episode of What's Going On with Shipping, what's going on with tankers? Hi, I'm your host, Sal Mercogliano. Welcome to today's episode. So, wow, Monday was a bloodbath in the tanker sector when it comes to shipping. Now, everyone's been talking about, including myself, that tankers are the place to be. And I want to talk about that because of the downside you just saw happen in the tanker market and try to explain why shipping is such a volatile and dangerous business to be in, whether you're sailing, whether you're in an office, or whether you're investing in it. This is why shipping doesn't always attract everybody to it. And this is a perfect example. If you're new to the channel, hey, take a moment, subscribe to the channel, hit the bell so you'll be alerted about new videos as they come out. All right, let's take a look at tankers. So here's the story that came out on G-Captain, Bloomberg's story. And I want to highlight just a couple of things that are in this story because I think they're fairly important. So OPEC Plus shock decision to cut oil production isn't just redrawing the outlook for crude prices, it's also hit the prospect of tanker companies that transport the barrels. So we're hearing from Saudi Arabia and then other OPEC companies of this cut, a cut of about 1 million barrels a day. Understand that's about one VLCC, one very large crude carrier per day. So that's 365 loads. That's quite a bit across time. And what we've seen is shares of companies go down. I'll pull up here a couple of these companies. So here is DHT Holdings right here. This is their 1 year record. So they're up over the past year about 58%. Plus 349. But if you look just the past week, you can see where that dip came in, that big substantial drop that came in with DHT. If you come over here to another one they mentioned in the story, Euronav, again, you see it's up over the past year. But again, come in here in the short term, and you see that drop that occurred on April 3rd, a pretty substantial one from about $16.78 all the way down to $15.90. And then the other one they mentioned in here is Frontline. Again, over the course of the past year, it has increased, but in a short term, you see a big substantial drop. And the question is, why is that? Why does that occur? Well, again, a lot has to do with the fact that OPEC Plus is now ordering this reduction of 1 million barrels a day. About 40% of the world's crude oil output is transported by sea, meaning that it doesn't go by pipeline, it's going by the ocean. And the largest ship tankers can now see their earnings take a slump. And this is a big issue. Understand that one of the things that we've been seeing, one of the reasons why we've seen this overall increase in profitability of tanker companies is for several reasons. Number one, Russia-Ukraine war. The price cap, and I'm doing a whole episode here coming up later this week on the impact of this. Lloyd's listed a series of podcasts that are absolutely chock full of information, but it's a Lloyd's List podcast, so it's a little boring to listen to. But I'm going to kind of boil down their 5 podcasts into a kind of more manageable form. But one of the things that comes very clear is the fact that the Russia-Ukraine war has put a big problem in the transportation of oil. We have the oil price cap on Russian crude oil, and what this means now is oil has to travel much further. And what we talk about here is that phrase I use with you all the time, ton miles. You're now shipping a ton of oil a much further distance. And that is a big factor. The second element here is there's no new tankers being built. There are some, but not a lot. And so the tanker fleet is aging out. Add to it, the third one is the emergence of the dark fleet. Now, the dark fleet has been around for a long time. It had been smuggling and going behind the scenes of moving Iranian and Venezuelan oil, it basically in violation of some sanctions. Now that has increased. It's estimated about 10% of the world fleet, almost 400 vessels, are now in the dark fleet transporting Russian oil. And so what we're seeing here is a substantial reduction. So there's a quote here from a tanker broker from Fearnleys. Fearnleys Shipbrokers does a great weekly report. If you're not subscribed to it, I'll have it in the show notes, excuse me. A really great report. I'm really looking forward to what they say for this week. What they said is an obvious negative. It's not what the owners needed. Well, yeah, we kind of all knew that. But there's been a couple of other issues here. One of the things we've been seeing here is that with China's exit from the COVID zero policies, that had fired up really the economy. Everybody was thinking that the oil demand was going to start peaking a little more with, several million barrels of oil being bought each day. But now what we're seeing is a reduction in that, which means that we can see a spike in the price of oil. Very good possibility for that to happen. One of the things that's been happening is Russian crude oil has been depressing the price of crude oil on the world market, but transportation costs have increased because of the distances involved. When you look at the rates for the tankers that have been out there, one of the issues we've seen with that is that the rates had gone up to about $100,000 a day. Now they've come back down. And so with the curtailing of OPEC Plus and the fact that the U.S. may be cutting back some oil exports, this will have a negative impact on the tanker companies. And what we're seeing right now is the tanker companies adjusting. And if you look at some other, and I'll show you just a few other ones here, some other of the major oil companies that are out here. So here's International Seaways right here. You can see them. They are basically, again, up over the year. But if you come to that 5-day, you can see that drop. Come over here to Scorpio Tankers. Again, another profitable company over the long term here, but in the immediate short term witnessed a major drop. And then TK Tankers, again, big growth, but everybody is suffering this same kind of input here as all of a sudden you see this quick drop off coming down. And what this means then for the tanker companies is that they're seeing a reduction. A lot of them are buying back stocks at this moment with the reduction in price. But what I would foresee is the question is the transportation cost is still going to be a lot to move this oil. You got to move it long distances. I think this is an immediate reaction to OPEC Plus's announcement, but I think in longer term, we're still going to see that steady growth in the tanker sector. And in particularly, one of the things we're seeing is shipbuilding. Some of the out shipbuilding that has been contracted with shipyards in Japan, Korea, and China have been for container ships are being changed over to tankers. And again, I think the tanker issue is a big one. So a question where it goes, I think this right now has got a lot of attention because of the immediate 1 million barrels per day not being shipped. But the question is, does OPEC continue this? Do they resume the flow? And what happens when oil starts getting over $60 a barrel for Russian export? Do they lose their coverage of their insurance companies because that's what's keeping them from shipping above that level? That's the measure that the G7 and the EU have implemented to halt the flow of Russian crude. Hope you enjoyed today's video. If you did, take a moment, subscribe to the channel, hit the bell so you'll be alerted about new videos as they come out. Leave a comment. Got a comment, share it. Let's hear it. If you're a tanker expert, let's get the dialogue going here on this channel. Leave a comment, share it across social media, give it a thumbs up, and if you can, support the page. How do you do that? Well, you can hit that super thanks button down below or head on over to Patreon and become a patron of the page. Till our next video, this is Sal, signing off.